Okay guys, I am back with another video. So this one might be a longer one. Hopefully I could keep it under 20 minutes, but there's so much to talk about here in this company, right? So I might be unsuccessful at it, but we'll see. Now, this is going to be a 10K for GameStop in the year 2023. And before I go any further though, I am not a financial advisor, right? I am not an expert in looking at the balance sheets here. I'm just here learning as I go and share the journey with you. I just so happen to own GameStop, and that's my bias, so keep that in mind as well. So, I'm not gonna go into every single line item here because, like I said, I'm trying to keep this video short, but I will pick and choose what I personally think is important, right? When it comes to look into the company and the health of the company itself, right? Now, for people who wants to look in depth into this, I will link the report down below, so you could do that at your own time. All right, I'll be right back. Like I said before, so I'm just going to focus on the retail stores that are being leased by this company, right? So as you can see here, there's a breakdown here. We could see that from 2023 to 2024, we are thinking about reducing our footprint by half, right? Close to half there, or more than half actually, if you do the math. Why is that? To me, if you look at the years subsequently from 24, 25, 26, it seems as though they are predicting something right here, right? Which means that I think they are preparing for the recession or the downturn of the economic data and all that stuff, right? Leadership is telling us that there's going to be a multi-year downturn, which is a good thing. Just because they are reducing storefront doesn't mean that they will reduce in revenue. As we see last quarter, we actually, kind of like the revenue was kind of flat. I mean, down 1 point something percent, right? Year over year, or even quarter over quarter. So, everybody is down by that much. So it's incredible that they are able to maintain that revenue, but still come out ahead, meaning in the positive, right? Last quarter. So to me, if you look at 26 to 27, you could see that they plan to increase the number of stores in the year of 2027. So what does that mean? It means perhaps they are predicting or forecasting, right, that we might come out of recession in the year 2027, right? So now, is that an end-all be-all prediction by the leadership? I don't think so. This is just a ballpark, right? And it tells me that this leadership is planning ahead, and that's a good thing. All right, that's good. Let's go here. All right, so one more thing that's kind of encouraging to me to see is the fact that they aim to own it, right? It seems like, right? Back in 2020, it seems like they sold their property and leased back. You see, like they sold their property and leased back. So I don't know. I don't know why they do that. Perhaps they feel like that will be beneficial to kind of sell at the top of the market and then lease and then try to buy back when the real estate market is lower in price. So it might just be a strategy that they employ here. To me, I feel more comfortable owning some stuff, right? But it might create some liability here with maintenance and all that stuff. But owning something, in my opinion, would be better than leasing because you're not really worried about the overhead, right? You own the property, all the expenses that comes with the owned property are just paying the upkeep, the taxes and all that stuff, right? And in my opinion, taxes is lower than the actual interest if you just lease the office. Hope that makes sense. All right. And then what else? So dividends. So with the dividends aspect of it, of course, I would love them to issue dividends really quickly, right? However, it may not make sense at this moment in time. And as stated here, so any determination to pay dividends in the future will be at the discretion of our board of director and will depend upon the result of operation, financial condition, contractual restrictions, including those under the agreement governing our existing indebtedness and other factors our board of director deem relevant. So that means that in the future they may not pay out dividend unless they feel comfortable about doing that, right? They're waiting for the operation, which we saw last quarter. They're doing better. Financial condition, obviously they're doing better as a company. Now, contractual restriction, there might be some restriction based on the indebtedness of the company and other factors that, again, the board may feel like, hey, because we are in recession, we want to expand the company or keep cash on hand in order to, kind of cover whatever this storm is going to hit us, right? The goal of this company is to survive without being in debt, right? So I think that's what they mean by that. So for those people who are expecting dividend, including me, we just have to wait, right? All right. So now this is also worth reminding people about as well. They also have over $100 million in stock buyback, and they are already authorized back in 2019 to purchase up to that amount of money, right? So what does that mean? It means that if the stock price goes down, let's say because of the market crash, people panic and everybody's selling everything, GameStop goes down to $10 a share or $5 a share, the company could buy those stocks back up to $100 million right there. All right, guys, I'm back. Sorry, I got distracted. So let's go through this again now. I'm not going to go through this business property here. Every single point, you could read that on the report yourself, but here's what I'm going to focus on. The NFT marketplace, right? Now, this platform has been my, kind of like enthusiastic about this company, or makes me feel like this is the biggest potential that they have, and that is to create their own wallet, right? That people could transact in, and it's non-custodial, meaning that, GameStop doesn't hold your asset in the wallet. You, as a person, when you create that wallet, you own that wallet. Okay? 1 second. So, this wallet will allow people, gamer, creator, people who wants to collect items to store, send, receive, and use cryptocurrency or NFT across the decentralized platform. What does that mean? It means that when you create that wallet, you own it. Even if GameStop go out of business, you own that wallet, right? You could still access anything NFT, cryptocurrency, or anything at all in that wallet. And you could resell, technically, if you have other platform, you could join them and resell, your NFT or your crypto in that wallet to any other platform, right? So that's a use case. That's amazing already to be able to do that. And what what also they did back in July is launching the NFT marketplace that I've been talking about for a very long time, right? Now, the launch, I wouldn't say that it's not successful. It's just that it's been delayed because of what's happening in the crypto market in general. The FTX thing, and the SEC is going after people in crypto or big companies out there like Binance and all that stuff, right? So we're still in the midst of this. Now, 2 years ago, they filed a lawsuit with XRP, which is the biggest, it used to be number 3 cryptocurrency in terms of market cap. Right now, I guess it's down to number 7 ranking, or 8. So the point is that they're going after crypto, right? I'm sure it's just to stunt the growth of it currently. So it's to slow the growth of it down, because, XRP especially was going to exceed Ethereum, when they filed that lawsuit 2 years ago. And so, there's whole other corruption in there. So I'm not going to go into that. But the FTX thing was kind of like a joke, right? They were promoting it. Like Forbes even put Sam Bankman-Fried on the cover like 2 months before everything just going to, everything hits the fan, right? But anyway, let's come back to NFT marketplace. Now, with this NFT marketplace, it allows gamers, creator, collectors, right? And other people who want to participate in this ecosystem to buy, sell, and trade their NFT at will, right? Again, the whole idea that kind of draw me in is the fact that you could own your own digital asset and manage it your own self, right? And then of course they have a partnership with Immutable X blockchain protocol in order to create that whole Web3 product in NFT gaming assets, right? Meaning that you could own the game, or perhaps just in-game item, in order to kind of like create a better gaming experience. And also to, if you buy your own skin, if you buy your own character, if you buy your own weapon, you get to kind of own those assets and perhaps resell it to somebody who would want it one day. Now you might say, oh, who would want to spend $10 on a skin? Somebody will. I'm sure someone would want to spend that much. Look at Fortnite. They make billions. They make billions of dollars just through in-games item every single year. And so there will be. There's a market for it. So trust me. All right, so this is just a comparison. We saw this number before, but this is just breaking down into US, Canada, Australia, and Europe, right? And so the total amount of store, let me double check. Yeah, it seems the same, right? All right, let's go with this one, 25 right here. Just real quick though, if you look at the net loss right here, it seems as though they are still losing $300 million. This is accounting for year to year, okay? And I think it depends on what time frame you were looking at. You're gonna see that there's reported loss there, right? And I think this is why they're not scared of this company, being much more profitable yet, even though they recorded the first quarter of the year being profitable, right? So just keep that in mind. They are still, thinking that this company is losing money left and right. Okay, and then if you look at the breakdown of the hardware, obviously they went kind of stay flat there. Software down in sell. collectible was up. So the up 17% on the collectible. All right, guys. So I'm gonna end on this one because this is kind of important to kind of look into. That is their cash position, and it seems to me that they are actually increase or able to increase by over $100 million in cash position. And if you kind of read on this particular item here, marketable security, you see that it was a treasury, right? So what did they do? They bought US Treasury right here, about $250 million, and they sit on it and they made, a couple $1 million on that as an interest. So they're being very responsible with the cash on hand that they have, keeping it intact, right? And even increasing it by $100 million to make sure that they have enough to survive this downturn that we're about to experience, right? So this is a good sign, meaning that they are the leadership is not wasting money, is not going to kind of make any rational or irrational decision to buy into any company or anything that will kind of put the shareholder in jeopardy of losing, shareholder value, right? So again, this is why I love this company, right? Because we have good leadership here. Very responsible, and it's not like it's matter of fact. It's not embellishing anything. They just show you the balance sheet and that would be it, right? Or show you the number and you could decide for yourself whether you want this company to be in your portfolio or not. Okay. I guess that's all I have for this one. I hope you are able to understand what I'm trying to articulate here. I'm not very good at explaining things, so I understand that about myself and try to be good at it. So please, be patient and have a good day. Bye.